This is an exciting day, Fanbase Finance family. Man, celebrating our 2 year anniversary, man. Hope you guys are enjoying the conversation so far. I'm going to bring you this week's news and finance update. So let's get into it. Number one, Fed Watch, one cut, not two. So Atlanta Fed President Raphael Bostic said he still sees one rate cut in 2025, calling current policy only marginally restrictive. He also flagged tariff uncertainty and cooler labor market as big wild cards. We'll get more signals at Jackson Hole. Separately, the July Fed minutes showed two governors that wanted to cut were basically alone. Also, the committee's center of gravity is still on hold unless the data cracks. So, really, the bottom line is odds of a September cut aren't dead, but they're softer than the market hype really implies. Um, let's get to number two. Number two, tech stumble. So AI trade hits a speed bump after months of AI euphoria. Big tech and chips slid this week. Nasdaq down roughly 2% over 2 days as investors question whether near-term AI profits can match sky-high expectations. Rotation into defensive picked up ahead of Chairman Powell's speech. This looks more like a sentiment crack or sentiment check, the game over for AI, but it does say mind your concentration risk. Number three, July CPI stayed tame. So inflation stayed cool in July. Uh, Headline up 0.1% on the month. The BLS says 12-month chained CPI is running about 2.5%. This gives the Fed cover to wait and see rather than rush cuts. So no victory laps, but no flare up either. Number four, consumers. From a consumer perspective, Walmart says value is winning. So Walmart raised its full year outlook, saying its low price focus is pulling in shoppers. But across retail, the message is mixed. Some chains see caution into the holidays. The households are still spending, but just more price sensitive and promotion driven. Number five, housing, a rare two-hander. So starts up, but rates are down. So housing starts rose 5.2% in July to a 1.43 million annual rate, with single rate family up modestly. At the same time, the 30-year mortgage rates eased to 6.58%, the year's low so far. Builders are inching forward and the rate drop helps, but affordability is still the problem. It still bites, so don't expect a surge. Number six, the American wallet. So gas steady, student loan policy is in flux. So gas prices held around $3.16 nationwide this month as crude stayed in the mid $60 a barrel. A little relief at the pump. On the student loan front, the Education Department proposed a new guardrail this week, and reporting around the one big beautiful bill points to a future income driven plan with longer timelines and fewer $0 payment scenarios for low earners. If you work in the public sector or use income driven repayment, pay attention. Rules and options are starting to shift. And then last, number seven, of course, the Target CEO shakeup. Cornell stepping down, insider successor has been named. So Target announced a leadership transition. Longtime CEO Brian Cornell will step down on February 1st of 2026 and move to the executive chair position. Um, Michael Fiddelke, the current COO and 20-year Target veteran, will take over as CEO. So essentially, Brian Cornell is going to become his boss. So he's going to be as executive chair. He's going to be over the CEO and the executive team, as well as involved in operational and strategic direction. So watch out for that. It's just a shift around. Wall Street wasn't thrilled. Target shares fell 6% on the news as investors questioned whether an insider can drive a turnaround after a long sales slump. Really, the context is Target's been losing ground on to rivals on price and merchandising. Comparable sales have been weak, and management says fixing product store conditions and in-stock levels is priority one. For shoppers and investors, look for tangible improvements in pricing, in-stock basics, and fresher assortments before this leadership change earns market trust and trust from Black folk. So that's your news for this week. Let's get back to the dope conversation, man. And happy anniversary to Fanbase Finance at 2 years old.